Alrighty, this is Friday, August the 14th, 2026. Current time is 12:14 in the PM Eastern Standard Time. This morning when I briefly looked at the markets, what my thought process was that we have a higher potential to have a drawdown day than an upper day. I didn't put it exactly like that. I said, all it takes is that little spark and a little dump in the markets is basically what I said. I didn't even pull up the desktop version of this. I was just on mobile this morning, just looking at it on there. That's how much I was on the side that it's a short day instead of a long day. On the 30-minute time frame, it's showing up as still being a potential short right now. RSI is very low, 33.732 right now on a 30-minute time frame. That's still coming down from what it was earlier. If that decides to bump up a little bit more to about halfway on this candle, just a little bit more about where my cursor is at 78.10 basically, then it will turn into more of a green candle. Shows up as being nothing but buying volume in the past 30 minutes or so. So that's, leaning me towards like this move may be over with. The top of the average daily range for today was here. It was above that and draw down below it. Technically, it's trading where it's supposed to be. On a statistical day-by-day basis, it's fine where it's at. It's not out of the realm of possibilities. When it's up here, is a little bit on the high side. This dump down here, I don't know when that happened or whatever, or what caused it. But also the ATR trailing stop from the 30-minute time frame picked it up, and it never dropped below that. Today it did drop below that. Usually powerful moves can't last forever. Eventually profit taking will happen. Whenever it does, then it's just up to algorithms and the other players on when they choose to let it either continue falling or pick it back up again. It used prior resistance as support or tries to right here a little bit. It's not beautiful. It's not the first attempt. So it's an older level that I have up there, but still it can stay relevant. So it kind of is what it is. Whenever it's up to 78.38, it was far above my expectations on where it'd go to in the month of August. So it's really very powerful move versus what I had modeled out. The reason, honestly, that I thought the markets could do more of a sell-off or profit taking today is because the VIX looked like it's extremely low earlier. Usually when the VIX is that low, I even have a mark set for 1550 because that's when I believe, or at least in this area, that many algorithms will sell their long positions in the markets and either buy into long positions on the VIX or they can short the rest of the market, either one, whatever they choose to do. On the yearly, it's not the yearly low yet. 15 is yearly low exactly, and you're already in that ballpark. You're already breaking down for the ATR trailing stop on the 1 year, 1 day. So that can pick it up also. You don't have a low RSI right now, 30 or anything, but still like it can be picked up very soon. And it can have an explosive move like it did back here if it wants to stay in that area. It may, I hate to say what it may do. The gravitation point for August is at 1825. That's what my model shows. Is that right all the time? No, it's not. But that's your statistical mean that happens often. It will gravitate to that. Sometimes they'll get up to that, then reject perfectly. Then the rest market just do excellent. But that's your midway point. That's where many algorithms either stop chasing that move if it wants to do reversal and come up, and then or they're more cautious in there. They're either going to sell the position or as long as their metric, whatever they base it off of, as long as like the buy volume on the 30-minute or whatever is still positive, or the RSI keeps on going up positively on every 30 minutes, whatever metric they use, then they can stay in their position like that. but that's why I thought the markets could do more of a pullback today, and the VIX hasn't really reflected that either. The markets overall has. It came down to a prior level that should have been a resistance level, and using that as support. On a 5 minute looks good right now. On 1 minute looks good. Yeah, right now it looks good. It pulled it down for 4 minutes back here. Red candles. I don't see a powerful move coming from that. If that was wanting to do like a strict reversal, then it should have stayed at least the yellow candles and stayed above the 9 moving average. It's attempting to right now to stay above the 9 moving average, but it's not the best look. The past 2 minutes, you've had mostly sell volume. The minute by minute sucks. I mean, I can generally kind of half-ass gauge it, what it may or may not do within the next couple minutes, or next seconds rather, on the 1 minute time frame. You've already had so much of a downward move today already. I mean, that's not massive. If you had one contract from high to low today, or high at 9:30 or whatever, 9:20, 9:15, whatever time it was, 8:30, anyway, whatever time it was, then you could have expected a broader move to the lower side from there. And now, like, you know, it's pretty much over with. In the last however many minutes has it been at 11:26, almost an hour ago, that was your highest volume node for this minute time frame, and it hasn't had another one to beat that one as of yet. That one back then was mostly buy volume. So then once you get back into this, I can just pick it back up again. They pick it back up again. You can see how just like wicks, no body, goes below this volume node right here of that one. And they just volleyed it back up. And that leads me to be on the assumption that any algorithms that seen this previous low, for whatever reason they picked it up there. Again, I didn't even open the desktop version this morning. And this changes too. This model changes. It would have looked way different also this morning than it does now. But anyway, they're basing it off that volume right here at exactly 11:26 today. So even if I was short bias, like this is like the maximum that I would be looking for right now. I wouldn't be expecting a broader move to the lower side. But there was definitely money to be made on the short side today, and that's what my take was this morning. I was definitely more short bias than long bias. I know most people are long bias like all the time, like perma bulls. This was definitely a squeeze action right here. This one was. As soon as you get that first red candle from a massive broad move, then the shorts pile on and profit taking happens. Then if you get back into it again, then like you see how it hovered around it, profit taking where it started about right in here or so. Yeah, exactly right in there. That's when profit taking happened again. It also used this previous level as support as well. So that's, I don't like that. I don't like basing a trade or thinking about trade off a previous level that every fucking body sees, because it don't do me any good, and it don't make me any more intelligent to be like, oh, it had support here, so I'll buy until down. You know, it just don't do me any good to do that. If that makes any sense, or like I did a dumb voice there or whatever. Nobody's gonna watch this shit anyway, so it don't matter. But that's how, you know, I would gauge it, and I was pretty damn right when I go. And, you know, if I was in a short position, like, you need to exit there. And that's where a lot of, you know, bulls bought it back up again. So that's how you read that. But basing it just solely off that, no. Just no. It's just another tool. Like, you never want to use like this prior levels as your main go-to. Your thesis needs to be based off of something else more tangible that not everybody sees also. I mean, a lot of people do see what I model out. So it's really a big thing. I can't remember what I said at the beginning of the year, what I thought the SP could do for the whole year. I think it was roughly in the 8,000 mark. I think it was 7951. I think that's what I modeled that. I might be totally dead ass wrong on that. And I think I made a video around December, maybe January, late December. And I think I modeled out what it would do, and I think my level was like 8,000. Maybe I'm wrong, but I'd have to go back in time and see that because I didn't save it. I didn't put it up there. 8,000 for 2026 would totally be within reason still. I think I hate to play into politics or what the Fed does. And I like to base my shit off of statistics and probabilities because there's less variables there. There are plenty of variables if you pay attention to politics and news and what the Fed's doing, and you can gauge it possibly better. I can't. I just can't. If I base it off of statistics and probabilities and bell curve and deviations from the bell curve, then I can engage it way better than I can without it. Just sometimes, like the news will happen to bite me in the ass, and because that's a variable that I'm not in control of, and nobody is, unless you are in politics. But it just, I don't know. Getting way off subject. Again, I know nobody's going to watch his stuff. It still looks decent right now, but I'm again, it's trading where it's supposed to be. Your statistical mean is up here. Like if I was long from down here for whatever reason, I'd be expecting to move up to here, and that'd be all I'd be looking for. Basically, it stayed between two deviations today. In hindsight, anyway, that's exactly how it looks on the 1 minute. And that's really common to stay within two deviations. I'm sorry, within one deviation. Yeah, one deviation is what it was. This is 1, this is 2, and way up there is 3. No, pull it down. This is 3. 3, 2, 1. Then this is 1, negative, 2, negative, 3, negative. So on days exactly, precisely what the model shows and what algorithms see, and so it's done exactly what it's supposed to do today. Even though, like, I was extremely bearish earlier today, which I was right, not to be more of a bear than a bull, but I definitely wasn't neutral. A lot of days I'm neutral because it's at a neutral state or is within the models. Like at a statistical mean somewhere, I have no justification for taking a position when it's within model in the middle. I have no reason to even base a trade off. But today I was very bearish. But looking at the chart right now, within one deviation, that's fine. It really is fine to be exactly where the fuck it is right now. And again, my expectation would be 78, 14, 50. And then I would have to sell long position if I was in long position right now, which I'm not. If I was in a short position, I'd expect it to come up to there. And then if it breaks above it, then I'd have to close my short position if I was short up here or something. And that's the way a lot of algorithms do. They just model it out, let it play off the statistical mean, let it get into the opposite of the model for the day, play into that. And that's exactly what the fuck happens, like all the fucking time. And I don't know why, like, this shit continues to go on. I really don't. But this is what it is. All right, goodbye. Come on, you punk ass. Did it not stop?